Hello, Theo Traders. This is Doc Severson with the evening report for Thursday, May 12th. I guess we have to start tonight's report by talking about Apple. Now, Apple has been sort of holding this level down here at about $92, $93 per share since last August when we had this initial sell-off back then, and that created this target. What you find is that when we have these really extreme spikes, either to the downside or to the upside in some cases, that it creates sort of a target. In a sea of sand, a single flag that sticks up becomes that type of target. And so what we saw over the subsequent months is that that level set up a lower high, got tested again several times over the course of several different weeks here, bounced back up again, and notice that it created another lower high setting up on this weekly chart. So this then becomes very ominous that this level has to hold. And when it breaks through like it did today, all of a sudden you start to see some downside targets come into play. So where is the next level of support for Apple? Well, that's the question everybody wants to know at this point. Now, of course, one thing could happen, I think, that would cause a lot of people to be surprised is that perhaps some support and some institutional buying comes in here at $90 per share, and this thing creates a bear trap and simply zooms to the upside. That I don't know if it's going to happen or not, but if it continues to go to the downside, if we start to see a lot of people saying, uh-oh, Apple broke support, so as of tomorrow morning, a lot of sell orders come into play, then we could see a downside target come into play. Now, there's a couple of different ways that we can identify where that downside target would be. For instance, one of the levels that I've been watching throughout the last year or so was really this 105 level. Why the 105 level? Because this set up, yes, a head and shoulders pattern, right? So even though the head and shoulders pattern is not a very reliable pattern these days, the downside target is about approximately equal to the distance between the neckline and the top of the head, which in this case is about $30. If we extrapolate that to the downside, that's going to be somewhere around the $75 level for the target. Something else that I can do is apply what's called volume profile to this chart. Now, volume profile is typically thought of as more of a day trading type of analysis technique, but we can certainly use it even on something like a weekly chart. Okay, so there it is. Now, don't be scared by this. What does this mean? Well, it just shows that all the activity of trading, all the volume has been occurring at these peaks. And so obviously we've seen a lot of trading at around the $110, $115 peak. And then obviously a lot of this around this 105 to low 90s peak. And if it gets past that level, there's basically what we show as zero support down here until we get to, guess what, 75. So 75 is the next big volume peak down here. And that seems to me to be the most likely logical target for Apple to come down to, at least from a charting basis, based on a couple of different studies or techniques in looking at the Apple chart. Now, just looking across the major indices, starting with the monthly chart, we've been in this monthly consolidation for literally a year and a half now, just chopping around in a very, very large range, approximately 300 points from the 1800 level up to about just over 2100. So because of this, we see big weekly swings within this consolidation zone. The most recent weekly swing has just finished and looks to be starting to move into consolidation. So we have this range expansion move here, about 301 points on the cash S&Ps. And now what we've gotten to is a level where it's starting to consolidate and pull back and go into what I call range contraction mode. Range expansion leads to range contraction. And once it fully recharges again, we'll move into range expansion again. But for right now, we're going to be probably chopping around inside of a range for the next few weeks. And what we also do is look at the daily chart for the moves within that weekly swing. And what we can see is that we now have the beginnings of what might be an important lower high setting up. So what I mean by this is that we have price action making higher highs, higher lows, all the way up here. all the way up here until we come down to a much lower low, right? So this is almost an equal low to this level here. And so far, all this bounce has provided has been a lower high. And if that does occur, if that lower high kicks into gear and then that's confirmed with a lower low, then what we're going to see is the weekly chart starting to pull back. Now, I do believe that about the 2000 level on the S&P is going to be major support for a couple of reasons. First of all, this is actually the 38.2% retracement of this entire swing, and this often becomes important support even if this just turns into a bounce from there to a lower high. So what we're going to find out in the next few weeks is whether or not the S&P wants to break higher from here or stay range bound, or perhaps even set up a lower high and then start working down. You can see this as well in the Russell 2000. The Russell 2000 has failed so far at the trend line. So this weekly trend line, we've seen the price fail and start to move into, looks to be a daily downtrend. Now we'll know more about this in the next few days here if this important lower high sets up with a lower low. So far it hasn't. The 1100 level on the Russell futures has held, but if that breaks through there, then we're going to start to see this weekly swing start to deepen just a little bit more. The last chart I want to bring up for tonight is crude oil, or the /CL contract here. Now, it's easy to forget that we're in a longer term downtrend. When we look at the daily chart and we see this ripping rally here, which has come off of 26 and gone all the way to 46. So this is, pretty soon it's going to be almost 100% gain in the course of just a few months. But we can't forget the context of what we're dealing with here is that we're just seeing a strong monthly bounce off of the bottom. We're still in a period of lower highs and lower lows, and we are going to get these big rallies that come off the bottom only to stall out here and then roll over again. What I'm expecting at some point here is to see this flame out and start to build what could be an important higher low. So before this will actually start to trend to the upside again with regularity, it needs to print that very important higher low down here, which can be used as more of a slingshot and change that trend from lower highs and lower lows to now higher lows and higher highs. And then this will be a much easier trend to play along with when it's actually moving to the upside and not fighting the major trend, in this case the monthly trend. So again, we're going to have these big moves here off of the bottom, and that's simply just an oversold bounce. But when that higher low prints, then we're going to have much more reliable trading conditions to go long on. So thanks for listening, folks. Hope to see you in the Theo Trade chat room. I'm on from 3 to 4 p.m. Eastern every day. Take care. See you soon.